What is a better investment? Gold or the stock market? That's the proverbial question on everybody's mind, especially in times like these when both of them are seeing a lot of interest. Let me break it down first. For centuries and millennia, we have been used to buying gold on important occasions. Gold is something that's handed over from generation to the next generation. We still adore our grandma's jewelry in gold, which was handed over to your father or mother, which will then get passed on to you at some point in time. It has a bunch of emotions attached to it, apart from, of course, value. But the reasons our forefathers used gold as a primary investment was that gold always contained value. The value increased as time went and kept up with the pace of inflation. So it was an easy asset for people to build, and it was very safe. More importantly, in times when some of the crops failed and people had difficulty with money, gold could easily be converted to cash and help them tide over difficult times. So traditionally, gold investments have held us sway for centuries in our families. Having said that, over the past 20 plus years, 30 years, a new animal has entered, which is nothing but the equity market, the stock market, either a share or a mutual fund or the Nifty index as we call it. These new investment products have been propelling investors' wealth at a much, much greater process. We have seen that a 20-year investment return, either in a mutual fund or a Nifty 50, has given a tremendously higher return to investors. What is stock market investing? In stock market investing, you're quite literally a part owner of that company. So as long as that company is doing phenomenally well, growing its business, catering to its customers' needs, you are also benefiting in two forms. One is yearly you end up getting a small dividend income from that company or that mutual fund. Plus, as the stock value goes up over a period of time, you also enjoy a reasonably good capital appreciation on your investment. So stock market investments, if done and held over a period of time in good portfolios, have been very rewarding to people. And over the last 20 years, stock markets have kind of mirrored India's economic story, and therefore people have ended up making a reasonable pile for them betting on stocks or mutual funds. But having said that, should one put all your monies in stock market? Therefore, the answer seems to be different, especially in the last 5 years. The stock market returns are less than what gold has generated as returns. Yes, you heard me right. While stock market has given reasonably good returns in the long term, the last 5-year return, gold has somehow been better off. Now, why is that so? Especially in the last 2-3 years, ever since COVID. COVID, of course, was a big event where gold again had a big spike, because when everything else fails, people want the comfort of safety and security, and gold is the one asset that everybody moves to. So ever since COVID, gold has had a reasonable run. Second, you also post-COVID had a couple of wars, Ukraine-Russia war, more recently the Middle East war that's happening. All of these unsettle people in some form or fashion. So apart from keeping some money in equity markets and other things, people want a little bit of safety in the form of gold. So the whole world is moving a certain amount of their money to gold. More importantly, China, which is the largest holder of US securities, over the last year and a half, is rumored to buy lots of gold, replacing their US dollar reserves. So lots of reasons why gold is starting to see a great appreciation in the past. Having said that, should one sell all equities and go to gold? The answer again is no. I think economic activity, especially in India, is going to continue to be robust. So our view is that you need to have a diversified basket. And that's where I think you will see the best benefit. A certain amount of money in gold will ensure it acts as an insurance against stock markets ups and downs, while a larger portion in equity markets will ensure you ride on the economic growth of the country. And I'm sure that over the next 5-10 years, the economic growth of the country will be reasonably robust to reward people who stay on equity in the long term. Now, as an investor, the question that begs us is, how should I invest in gold and how should I put? Now, there are products which mix both. There are mutual funds which are called multi-asset funds. These multi-asset funds typically put 33% of their money in equity, 33% of their money in gold, and 33% of their money in some fixed income like FD kind of products. It's like a triple ice cream sundae. You get the benefit of 3 items within one fund. So that's an advantage. That's something you can look at. But you can also look at standalone gold products like gold ETFs or gold mutual funds, which you can buy in the stock market and from the mutual fund, which will mirror the gold returns over a period of time. Of course, you can invest in equity mutual funds separately, and as a portfolio, you can diversify. So there are a variety of different means one can take to achieve the end of having a portfolio that has a good mix of equity and gold. But the answer is, the truth is that one needs to have a mix of the two, not one or the other.